Good morning, everyone. How's it going? It is 6 a.m. on January 29th. Just starting out what is looking like is going to be a very, very active week with all the news, or I shouldn't say news, all the economic reports and the companies that are going to be reporting. It really does. I'd be very, very surprised if we don't get a break, either to the upside or to the downside this week. So it feels like we are actually going to get a direction sometime this week, probably either tomorrow or Wednesday, given the timing of all the reports. So let's take a look at everything. And we might as well start with those futures. Everything's basically very, very flat, almost zero on all the major indices. That's not a big surprise given that we have a whole bunch of news, a whole bunch of companies reporting in as soon as tomorrow. So we probably won't get a lot of movement today, but starting tomorrow, we should start to see that volatility come in, maybe get some finally in the markets. So if we look at our meetings, where's my economic report? There you go, calendar. Okay, so last week I wasn't able to look into this week to see exactly what we had going on, but now obviously we can, and nothing much today, but tomorrow we've got consumer confidence, we've got jolts, those are going to be really, really big. The FOMC meeting begins, and then on Wednesday, I believe we get our announcement and our press conference. Those will have potential to really move the markets, but we have so many other things. We got the petroleum report for the energies markets. We've got housing stuff going on. We've got all sorts of stuff going on. But really the Fed announcement and then the consumer confidence are really going to be big. We also have some PMI, some inflation related stuff, but after the Fed announcement, that's going to be a lot less meaningful. And then at the end of the week, we've got the employment situation and consumer sentiment. But again, the star is going to be that FOMC announcement and that press conference. So what could they potentially say that would move markets? Well, last time when asked about rate cuts, Powell was like, oh, we haven't even discussed it yet. So that didn't put a damper on the market. Then we had a whole slew of Fed speakers come out and say, yeah, it's too early, it's too early, it's too early. Well, now it's very unlikely that Powell's going to go, hey, we haven't even talked about it yet. It'd be a little unbelievable if he came out and said that. So very likely they have talked about it. And then the announcement will just be, do we move the needle? Do we start cutting already? Which very likely is no. Basically, the market acknowledges that. Every time we've looked at the Fed Watch tool, we've seen that it was priced in at least 97%, now 98%, that we're not going to have any change to the rates. But tomorrow, even if they don't change the rates, what's going to be more important is that press conference. I'd be very surprised if no one asks him, hey, did you talk about cutting rates? How soon are you going to cut rates? And we should be getting at least some guidance as to the conversations that they had about cutting the rates. And then we will see a change, most likely, in these likelihoods of a rate cut in March. Looks like this crept back up to about 50%. We were as low as 40-ish percent, 30 something percent last week. But my feeling is this is going to get even lower after tomorrow. We'll see. We'll see. But what's more important is how that will affect our bonds. So last week we just went sideways in our bonds. That was meaning that we're not having a big effect. Like the bonds kind of backed off and allowed the markets to do what they were going to do, but the markets basically didn't do anything. They just started going sideways. The S&P 500 crept up as well. I'm in the wrong view here. Let me get my normal view with the lines that we drew before. We went very, very close to this blue line that we drew, like almost perfectly, and went very close to that psychological resistance. Now that high on Friday didn't quite reach it. So will we reach it today? Given the way that we're opening up in the futures and the fact that we have a whole bunch of news tomorrow, it's not that likely, but traders sometimes get ahead of themselves and try to front run news. So it's not impossible that we might touch that psychological resistance. Now, tomorrow, I will be very surprised if we don't touch this psychological resistance. We should start to see that volatility come in after the FOMC announcement and then pick a direction, either up or down. Now, the market has a very, very, very strong history of moving. I guess it depends on your perspective. Usually what happens after the FOMC minute or announcement is a directional move. And usually that directional move is a fake out. So if tomorrow after the announcement, it goes higher, usually what happens is the next day it goes lower, and then that's the direction. It overcomes the initial upward direction from the announcement, and then we undo it, and then we start moving in the downward direction. And of course, the opposite. If we move down after the initial announcement, the next day and for the rest of the week, we tend to trend upwards. So I want to be very careful with that FOMC announcement and reading too much in the initial direction of the market. So I wouldn't be picking directions until Wednesday at the earliest. We really want to see what's going on in that FOMC report and how the market reacts to it before we start to consider repositioning ourselves. It may be that we just leave our portfolios the same and just make sure we're hedged, because that directional change could happen. But for now, we can't draw any conclusions. We can just kind of plan our strategy. And then if we take a look at our stock screener, let's just take a look at what's reporting in the S&P 500 today. I don't think anything, so today after market, nothing too exciting. Tomorrow before market, nothing too exciting. Marathon Petroleum, maybe. Pfizer. Pfizer's a very big market cap. Cisco Corp on the staples side, and then UPS. Okay, that'll be big. So we're starting to get pretty broad in our sectors. And then if we do tomorrow before open, and then we do, tomorrow after close, and then 2 days later after close, we don't have that. So let's just go for this week, and then we can sort by our earnings date. And then tomorrow before, we already looked at that, and then we can look at tomorrow after. So we've got BXP, Boston, that would be, Boston Properties, that would be real estate. We have AMD, Google, EA, not as big, Juniper Networks, that they are rumors of, or not necessarily rumors, news of being bought out, so that won't be significant. Mondelez, big on consumer staples, Microsoft. So we got some really big names coming up on Wednesday. So that is going to start really moving the needle. FOMC, then we've got Microsoft, Google, and what was the other one? AMD, and then probably a couple others that I didn't go down the whole list coming out on Wednesday, and then a few others coming out on Thursday. We did this on Friday, took a look at the companies that were going to be reporting, and we said that about 20% of the entire market cap of the S&P 500 is reporting between Tuesday and Thursday. And actually more than that, just 4 companies made up that 20%. And then all the other companies, we're talking a significant portion of the S&P 500 reporting in the next few days. So again, I'd be very, very, very surprised if we don't get a clear directional break above the psychological resistance or a rejection of that psychological resistance this week. So we're probably finally going to get some action. Things are going to get a little bit more exciting than they have been. And if we're not properly hedged or properly positioned in our portfolio, we're probably going to get some really big surprises over here. So be careful. Make sure you're well positioned. Make sure you're sized appropriately. We don't want a move to one way or the other to destroy our entire portfolio. What that means is we don't want our entire year to be made in the next few days, and we don't want our entire account to get blown up in the next few days. The high risk that we take, it might pay off, but it could destroy the portfolio as well. So we want things very balanced and sized appropriately, where it's not a ginormous payday relative to my portfolio, and it's not a event that completely destroys my portfolio. Okay. So S&P, let's take a quick look on how, the futures are so muted. It's unlikely that we're going to glean anything useful by looking at the pre-market. And yeah, it's just very, very tight range right here. We're still operating on the exact same lines on the S&P 500. We still got our 490 level up here. So we'll see. I'll be very surprised if we get really directional today with all the news events that are happening later this week. So just be prepared. Don't be surprised if we have a very muted and quiet day, unless you played some earnings. Now, of course, those earnings specific names, they might be very active, but other than that, I wouldn't look for huge direction in any of the major indices today. Yeah. So I'm just curious because we did play earnings in one of our portfolios on a SoFi. So let's just take a quick look at that. Earnings were very good, and looks like we are opening pre-market at about 875. That's a nice big jump up, and that bodes well for our position. So we'll see how that opens up. But that's it for this morning. Just all the action is going to happen later tomorrow and Wednesday and Thursday. So just be prepared for a exciting week, and I will see you guys later in the after market session.